Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, May 20th, 2014. We had a bifurcated day where we had some strength in the ES, but we had much better relative strength in the NASDAQ side of the market, with a lot of the high beta names really catching a bid today. The Russell 2000 also had a really strong day, bouncing back as well, and that's something we'll take a look at that we don't always dig into. Bonds started to roll back down today, so it's definitely a risk-on day across the board. Market internals were okay. We're plus about 1,000 issues on the New York side and the NASDAQ side. So a pretty decent day for the market. But the only fly in the ointment might be that it was on fairly light volume. And but that's okay. You know, first day of the new option cycle. Expect the volume to be a little bit light, but we definitely want to see any further upside accompanied by a little bit more volume than this. Here's a look at the ES futures. Definitely a strong day. We really didn't get up and even close this one open gap here. That might be the thing that really needs to be done. That could be a technical feature. We could easily do that tomorrow on kind of a modest gap to the upside, and if we do that, we basically might feel a draw back down to the downside again to that 8/8 level, 1875. So for now, we're still in this failure pattern where we broke out his lateral range, smacked the risk level, and roll to the downside. So for now, even though we're higher on the day, it's really not clear sailing, especially with the volume the way it was today, being definitely down. We're down from Friday expiration, but we'll have to see a little bit better volume come in and see the buyers really starting to put some money to work rather than just the sellers starting to step out of the way. Positive is we're still maintaining play above the 50 DMA, which is definitely a positive. So right now, the two key levels really near term are the 50 DMA on a closing basis, and also the risk level here. So right now, you know, we're still basically lateral and neutral until we resolve that range. Moving on to the NQs, see the NQs look a little bit different. We talked about that relative strength that they have. This is definitely a pretty strong up candle, getting some distance above that 4/8 level. It was actually a new high close on this move right in here. So that's definitely a positive for the market, but you can see it wasn't tremendous volume. So I want to see the market build upon that. You can see that we're trying to turn the market back up here. This close above the 50 needs a follow through to the upside, so that still remains to be seen. If we do get through there, this 5/8 level at 30, 36, 32 will come into play for sure. To the downside, this 3/8 level where these tails lie from late last week are going to be important. And that's only 35.54. But for now, you can definitely see the upward bias that we have now with successive higher lows and printing new higher closes here. So for now, we've got a little bit of a gentle upside going. MACD is above the zero line. That's always a positive. As soon as we get that done, we're right at zero. We're just below the zero line. So once we get above that MACD line, we could definitely see some momentum start to gather here, and maybe take a shot at some of these higher levels. Here's a look at the Russell Index. The Russell Index finally getting back into gear. The Russell Index, which represents the small caps, was by far the weakest of all the majors. You can see all the time we spent below the 200 DMA. We're well below the 50, so this 4/8 level at 1125 could easily come into play, and then just see the DTL here, that's the diagonal trend line that's in play, and if we take that out, then we could definitely be talking about higher levels. TLT rolled to the downside today fairly aggressively after not really doing too much in the morning. It was really kind of a late day thing. So this 8/8 level at 112.50 is also where the 10 period moving average lays. So we're going to have some pretty important support there. If that breaks, note that we do have this breakaway gap here. That's actually really an exhaustion gap, but we do have this gap here, and if we break down into that, then we'll have to start filling these other gaps down below. Here's a look at the oil futures. The key thing about the oil futures is that we are now 9 days up in the seeker startup, and we've not exceeded the static trend line here from the previous 9-bar drop. So we're going to have some real resistance here. So this could definitely change trend and start to roll back to the downside for front month crude. Gold futures today, basically just dead sideways. We've been sideways here for a multi-week consolidation area. So for now, really need to break out of this to find some kind of direction. Here's a look at the multi-sector daily chart. The gold was fairly weak today. A little bit of a bounce back in the banking index, which is definitely welcome, and also the oil services. But the big one here is the transports, basically reaching up and challenging the previous high. So definitely seeing some pretty good action out of one of the key late cycle sectors. So really need to see that continue. If the transports break out, definitely want to be involved in that. And not fight that at least for now until we get a confirmed lower high. Here's a look at the sectors ranked from best to worst. Top gun was the airlines, which is kind of a subcomponent of the transports. The BTK was also very strong, finally getting a little bit of a bounce back. Semiconductors were strong. Oil services hanging in there. The transports that we just talked about are taking a shot at their previous high, this is all positive stuff to see these performing fairly well today. The banking index was fairly flat, and the pharmaceutical index was definitely affected by the news with the AstraZeneca and Pfizer merger. So you have to discount that a little bit today. And the utilities, which is kind of a safety group, and also very interest rate sensitive, they follow the bonds, were very, very weak. Looking at the individual sectors, first up is the oil services, the OSX. Definitely a positive day, but we didn't complete this 9 bars down yet. Right now we're just using this 4/8 level as support. If we continue higher, we're going to have some pretty good resistance at about 287.5, where the 50 DMA comes into play with the 6/8 level. Turning our attention to the transports. Transports again match that previous high and are trying to pivot higher here with a new run to the upside here. Expect some pretty decent resistance at the plus 2/8 level at 79.68 3/4. But at the same time, while that's important resistance, if we do break out and take that to the upside, that's going to be a frame shift opportunity here, where this can really start to continue this trend and start to spread out the levels for some higher prices to be recorded. XOI was still a little bit sloppy here. This is the kind of the less volatile OSX, if you will. These are more of the actual producers rather than just the drillers and whatnot. So definitely seeing some sideways action here, feeling the effects of this 13 exhaustion. Definitely could see a hookup back here to 1625. So definitely keep an eye on the EOGs and whatnot. But the key thing here is if this does break this little range here and we lose this static trend line, MACD is now negative, we could easily start to roll back here. This has actually been a pretty good run from 1380 all the way up to 1620 in a relatively low beta group. So we've had a pretty extended run to the upside here. If we do roll to the downside, we definitely could put this 50 back into play. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.